Today is Tuesday, August the 11th, and today is the beginning of what we've been talking about for several weeks now. So let's take a look first at the underlying stuff in the market, and the McClellan oscillator dropped a little bit. The summation index continued to tick higher, which is your forward 3 to 6 month indicator. The volume was better than yesterday, was better than any other day last week, and was better than the previous 1, 2, 3 weeks, bar one day, this Friday, July 31st. So volume was good. The advancers and decliners were pretty much flat, and you can see that the advancers and decliners, as a sentiment trader, if you look at sentimenttrader.com, he noted today that the A to D swings are starting to moderate. And that's what we're seeing here. We can see lower highs and, for the most part, higher lows in the advancers and decliners. So we're getting this moderating period like we saw back here at the beginning of the year. But the charts are what we look at, right? So let's start with the SPX because that's the big one. And look at how close we came to our 100% target. If you look at a closing day, let's look at that closing candle for our high back here. You can see that the closing, let's just move this over. This was the close. This was our high right in here, but our close was somewhere in there, and look where we were, pretty darn close. So the sellers were sitting right at the closing high of back in February the 19th. So the sellers were anticipating a touch of 100% and caused that pullback. Now remember, yesterday we exposed this 300% Fibonacci that goes way back even further, the details of which you can see. It's this 2007 to 2009, so the Great Depression, the mortgage crisis, the bank failures. We have now hit 300% from that bottom. So both of those Fibonacci's are pretty much foreboding. Keep an eye on those. This is what we expected to happen today. The Dow Jones, this is a weekly, and it's pulled back from its weekly, still above the 78.6, but now the Dow Jones is the only one that isn't really approaching its previous high. The NASDAQ has already blown that away. You can see here was the coronavirus high. The NASDAQ has blown that away, and once it hit 150%, has now pulled back to support on 138.2%, and we're seeing that in Apple. Apple at 127.2, Fibonacci, this extension off of this big wave and this pullback gives us, well, this one. So that's not the one we have here. This one here. This is the one that we've reached 127.2 on. But let's just take a look at this one, for instance. So we've got 127.2, but we don't have any of the other Fibonacci's. So let's just load some of those up. Let's go to, let's put in 150%, and let's see, higher than that. Let's take a look at 161.8, higher than that. Let's take a look at 227.2, and there we go. So even off of that wave here, extended from this low in January of 2019, we're approaching 227.2, and we've got some selling. Doesn't mean that Apple's pulling back. Remember, I have the short puts. I have the September 400 short puts that I sold for $5. So obviously those are deep in the red right now, but that's assuming that by September the 18th, we're going to pull back to 400. That's after the 4-for-1 split, and that would be below the 100% Fibonacci line. So I'm pretty comfortable holding on to those. Worst case, I'm going to end up owning Apple for $95. Caterpillar, this is a weekly chart. You can see it's pulled back off of its weekly high, but it still stayed above that trend line. So despite the turnaround in the market today, Caterpillar still ended up $1.23. Home Depot up $1.27. It defied the downward in the market, but look at this 127.2, which it tried to stretch for but didn't quite make. What I'm looking at is some of our dividend stocks. AT&T, this is a weekly. Let's look at the daily. Remember, I've been buying AT&T as it's been around $29.50 to $39.10, and it's starting to move up. This is a 7% dividend stock. So when people are moving towards dividend stocks like they are obviously doing, if you look at this volume here, they're obviously doing with AT&T, they're looking for some protection for their money. Even in a pullback, they're going to get 7% dividend on their money. The other ones that I have, of course, are AGNC and the AGNC federally backed mortgage REITs. This is their preferred shares that have a face value of 25. These stocks, we were able to pick them up as low as $9 and $10. And look what has happened to them, how they've rebounded. And remember, $25 right in here is their face redemption value. So they have been on fire. These are paying over 7% dividend, and you can see that they have both been moving up. This N is a little bit different because N just was recently released. But you can look at M, P, O, and they're all doing really well, and they're all above 6.5% dividend. Whirlpool's the last one. We're going to actually look at a couple more. Whirlpool still continuing to move higher, and it's in that shark pattern, so 216 is beckoning. Somebody said, let's take a look at Tesla. A friend of mine yesterday bought Tesla for over $1,400. Ouch. It did move up in the aftermarket after they announced their 5-for-1 stock split. That'll happen the same day as Apple, August the 31st. So that moved the stock up a little bit. Otherwise, it was a pretty not so good day for your Facebook, for you Tesla people. Facebook seems to be retreating. Haven't got any Fibonacci's. There's a Fibonacci set right there. So you can see 161.8. Now we're pulling back to 138.2. That's after we finished this alternate bat pattern, and then we continued to hold that alternate bat pattern. Then we had the pullback, and now we're moving higher in A, B, C, D kind of wave. And now we've got to look for another type of Gartley setup setting up in Facebook. Disney, still tracking along. The other ones we want to watch are the banks, and the banks today were up surprisingly. Look, JP Morgan up 3.5%, Wells Fargo 3%, US Bank 2.1%. So all the banks were up. So we had the NASDAQ pullback, but we had a good day in the banks. So we've got choppiness happening now, and you would expect that in the S&P you've got this pullback. We have to see it. If you want to know what's going to happen, go back and look at the last time it hit a previous high after a pullback, which would be right in here. Here's one right here where we pulled back. This was mid 2018, had this big 10% pullback, and then we pulled back, and we came back, and what happened? We immediately dropped down to the 200. Came back again, dropped down to the 200, came back again, dropped down to the 200. Then we had the big strong run before COVID. So what does that mean? Are we going to come back again to the 200? That would bring us all the way back to 3,000. So heads up, keep your eyes open. Anything can happen.